What clean energy stocks am I nibbling on for the future? What triple leveraged funds am I using to play this crazy stock market? What major factors are driving this kangaroo up and down insane market? Hang on. Hey everyone. We're going through a tough time with inflation, but sometimes it helps to put things into a little bit of perspective. And I think this information will help put it into perspective and make it seem like less of a problem than it really is. After all, there are problems and then there are real problems. Okay. In Argentina, they recently raised their interest rates 5.5% to 75%. And that's because they have 60% inflation and they believe you got to go above the 60% to get it back down. Even in spite of that, economists are predicting now that Argentina will have 100% inflation. Their prices will double in a year's time. Holy cow. In comparison, we have no problem. Because of the market's volatility, I have two investing strategies right now. I nibble on newer, smaller stocks that have great growth potential, and that's for the long term. I don't know if we've hit the bottom yet, but we're on the way there. And I'm going to try to buy these going through the bottom and upwards. And then my second strategy is to use triple leverage funds. And that could be either on the upside or the downside, just given the great variability you have in this bear market. The first nibble that I will talk about today is ORA, ORMAT, ORMAT Technologies, which is a geothermal company. This company is amazing. It's the number one geothermal stock in the world, I believe. The United States is number one in geothermal to begin with. And ORMAT Technologies, ORA, has 30% of the market in the United States for geothermal energy. Also, its story is kind of complex. It's tied up with a company called NV Energy. That's capital N, capital V Energy, which is owned by Berkshire Hathaway. And they have great future prospects because it's thought that they built in Nevada, because Nevada has good structure for geothermal energy. Geothermal energy takes advantage of steam produced underground by the great heat inside the earth, and uses that steam to create power. And the rumor is that Tesla built its battery gigafactory in Nevada because of its geothermal energy prospects. Okay. And ORA also does battery storage and could benefit from Tesla's progress in that area. ORA is going to be expanding its battery storage and its solar energy business. So there's a lot of aspects to this company. And I think geothermal is in the future, but this is right at the cutting edge. And the stock is recently been viewed favorably. So you have a stock which is possibly at the cutting edge of an ultimate technology to help the energy situation and to be very clean. And then you got the Tesla mystique thrown in with it. So I think this is enough of a positive story to be a long-term nibble, and I will keep nibbling through this crash. ORMAT Technologies price to earnings is a too high 53, and its earnings growth rate is 14%. But this is one for the future, and you're buying it for the story and its association with Berkshire Hathaway and with Tesla. So I think it's a reasonable risk for me anyway, and I'm going to look at it as a long-term thing that I'm going to put a limited amount of money in and see what it does. My other nibble for today is New Era Energy. Okay, and it's a utility that has a clean energy part to it, or an association, and it's complicated, but Next Era Energy, that's NEE, created Next Era Energy Partners, whose symbol is NEP. So NEE is the overriding symbol in my mind, because they do everything. They do all kinds of energy, as they're a utility. That they also have created this clean energy part. NEP is strictly clean energy, but it was created by and benefits NEE. So they're intertwined. However, looking at the statistics, NEE comes out somewhat better. So I'm going with NEE. We are in a transitory stage. I'll keep my eye on NEP and may go on it if the statistics start to improve. But for right now, in my mind, this isn't exactly right, but in my mind, NEE looks like almost a mother company because it created NEP. But I think they have fairly good statistics. Again, this is new. This is in transition, so I'm not that harsh with it. I think we're in the very first or second innings with this company on its path to growth. So Next Era Energy is a utility company that does all kinds of energy. But their new association and creation of NEP, Next Era Energy Partners, because they're partners with NEE, that NEP is strictly clean energy. And so NEP benefits NEE. And so I'm going with what I call the mothership company. It's not the mothership, but they created NEP. So I think of it that way. NEE, Next Era Energy, has a price to earnings of 30, which is a bit high. But again, they're going with this new energy, renewable energy partnership. So we don't want to be too harsh with it, because it takes a lot of investment to get another company really going. But their earnings is a very good 22%. So their earnings growth rate. So I'm quite comfortable with this stock. NEP is one for the future. NEE is one for now, or in the near future, let's say. My second major investment strategy is to use triple leveraged funds. And I will be using SQQQ, and that's a triple leverage inverse fund on the QQQ. The QQQ is the 100 largest companies on the NASDAQ, and the SQQQ shorts those 100 largest companies. It's the FANGs like Apple, Amazon, Google, Meta, the usual suspects, okay, the gigantic companies on the NASDAQ, plus the next 90 or so. And it tends to go up dramatically when the market's going up. It tends to go down less dramatically as the market's going down. But I think we're reaching the end stages of this crash. I think we got another 10 to 20% to go, but it's going to go. And these big ones are going to be the last to go, and they seem to be going. Apple is going down. It's struggling to hold at 150. Tesla, on the other hand, has been doing amazingly well, and it's holding a little bit above 300. I don't know how long that's going to last. I suspect it's going to ultimately come down, but it's not going to come down like a lot of the others. But this is the situation. I'm going to use SQQQ on the downdraft, and I think that's mainly what we're going to get. And I will get $3 for every. I get $3 to the positive for every dollar that the QQQ, the 100 largest companies on the NASDAQ, go down. On the other hand, you can also get sustained bear relief rallies, and they can be wildly positive, and that's why they can be such a fake out. So if I get a significant uptrend and it looks convincing, I'm not sure that the market is turning, but hey, I'll take a wild bear rally also. In that case, I'm going to use the TQQQ, and that's tripling the returns on the QQQ. So you get, for every dollar that the QQQ goes up, you get triple the amount. You get $3. So that could be quite a good investment too. But unfortunately, I think I'll be doing SQQQ mainly for now. You know, in the 1970s and 80s, there came to be a saying that cash was king, okay? And the reason for that is that the market was doing poorly. But if you put your money in a money market, you would get over 10%, maybe 15% at times. Okay. And you know, it beat the heck. To get 15% while your stocks are going down 20%, it didn't take much convincing for everybody to put their money in the money markets. And that's why I don't remember it as really being that stressful of a time. You know, and right now, the American dollar is so strong. You know, the other countries are really hurting. They're hurting worse than us because our dollar is so strong. We can buy things cheaply. You can go to Europe now. It costs less for us than for them to travel, simply because our dollar will buy more over there, because we get a better exchange rate because of the strength of the dollar. So I might change that saying, because you know, history repeats itself. It never really repeats itself, but it usually rhymes, as Mark Twain said. So I think I would change that saying to the dollar is king, because compared to other currencies, we are king, and we are better off than the rest of the world, despite what you hear from the media. And I'm going to go through a litany of bad news now to show you why. There's no choice for me but to short. This is not investment advice for you. I don't know your personal situation, but for me, based on my experience, it's time to go with inverse funds. And triple leverage, all that means to me is I'm tripling my fund. Oil dropped for the third week in a row because of the worldwide recession. China's troubles are much worse than we originally thought. Their real estate market has dropped for 12 months in a row straight. I'm using Yang, YANG, which is a triple leverage inverse fund on Chinese stocks that trade on American stock exchanges. FedEx tends to be a pretty good predictor or indicator of how the economy is doing, and they announced that they're reducing flights. Okay, they're closing 90 retail stores. They're freezing hiring and reducing hours. This is all bad news, and it's not a good sign for where the economy's headed. Gold sank to a 2-year low, and it's gone down about 5% in the last month. That's why I'm using the inverse fund DUST. It's like gold dust, right? That's DUST. And DUST, DUST, is a double leverage inverse fund on gold miners. All the rallies this year have been bull traps. which does not inspire confidence in going with the rallies too much. Although, if they look convincing, I'm going to go with them for a while, at least put some money into TQQQ, the triple leveraged bull fund on the 100 largest companies on the NASDAQ. Jerome Powell of the Federal Reserve Board is likely to raise interest rates to 3.25%, which will be a 0.75 increase on interest rates now. I think the terminal rate, the rate that they finally get to, will be somewhere between 5 and 6%. It might be lower than that. It might be a little higher than that. I suspect more lower than higher, because I think inflation eventually will come down as the recession sets in, so that they don't have to raise the interest rate that high, because they're very close to tipping the country into a depression. For me, we have the 2 quarters of negative growth. That we're in a recession is not the question anymore, in my mind. In my mind, the question is, how deep of a depression are we going to go into? Although I would still hang on to my nibbles, because I believe in those in a long-term basis, because they solve the problem of energy, the need for energy, and the need for a cleaner environment. This has been the worst stock market year to date since 1962. In 1962, John F. Kennedy was president, and the Russians, who were led by Khrushchev at the time, were going to put nuclear missiles on Cuba. And Kennedy called Khrushchev and told him that was not acceptable. Stocks have gone down in September 4 of the last 5 years. So its downer reputation is well earned. And I bet if you could split it up, so you looked at from the middle of September to the end of October, that I bet that would be outstandingly negative. Some of the great crashes have occurred in October, and that's why I got October fixed in my mind. But September is usually on the way to that, and so you can get a lot of the decrease in September. And there's an old saying that if you wanted to time the market on a seasonal basis, generally, an idea might be to buy around Halloween and sell around Easter, okay? Because stocks usually go up in that time period, mainly because of Christmas, I suppose. Around this time of year, I often think stocks often fall in the fall. So the future of stocks, in my mind, barring another black swan event, or I suppose we could get a white swan event. It's about time something good happens. But in any case, September 21st, which is a Wednesday, the Fed announces how much of a rate increase they're going to do. And there's an 80% chance that they're going to go with 0.75, which will bring the interest rate up to 3.25. Mortgages are already up over 6%. And now they're going to increase rates. The Fed's going to increase the rate, the basic rate, by 0.75, and mortgages will probably go up even more, possibly. You never know. The relationship isn't 1-to-1, but it usually will. It at least will increase interest rates, and they're already too high on real estate. But we need prices to come down on houses so people can afford them again. Most houses, I don't know how people buy their first house anymore. It's become very difficult. And so we need the prices of houses to go down. But I think the increase in mortgage rates will crash the real estate market. I think probably 20% is my guess, and it is an educated guess. So I'm investing in DVR, which is a triple leverage inverse fund on real estate. In bear markets, the VIX, which is a measure of volatility on the S&P 500. It's actually a prediction of how the S&P 500 will do a month out. Okay, and the higher that is usually due to a bear market, because the market tends to go up like an escalator and it goes down like an elevator. Okay, and so you get more volatility of the stock market in a bear market. And the VIX is the measure of that. And the way you can invest in the VIX increasing is by using VIXY, VIXY. And it's a one-to-one relationship. The VIX right now is in the 20s. And if we have a really bad crash, which you really need to end the bear market, it has to get so bad nobody wants to buy stocks, and that's where when that happens, it's bargain time, and I will back up the truck and load as many stocks as I can onto the truck. Okay, it's really that basic. I've done that in the past, and it's always been profitable for me. So its symbol is VIXY, and I think it could well go over 40, and it can go over 50 or 60 if it's bad enough. You know, YouTube is very interesting, and we all have different prognostications of what's going to happen, and you take your best shot, and that's generally you're ahead to say the market's going to go up, and so many people become perma bulls. Okay, and I like to be bullish. Okay, and I really dislike shorting. It's very stressful. It's very hard to do. But the thing about it is I've been through enough crashes that I know how the story goes. And this is the only time I use inverse funds, just because you get a weird market that has this wild volatility. But I noticed one perma bull that I listened to, because every once in a while he gives a recommendation. Oh, that sounds reasonable. And I at least check it out, you know. So, and in an up market, you know, everybody's right. You know, in 2020, you could pick anything towards the end and it all went up. You know, that's the year I made so much money in Tesla. I couldn't believe it. I think I made like $500,000 on Tesla alone in that 1.5 to 2 year time period. YouTube is a very interesting place. It's been very good to me. I enjoy doing this, but I dislike shorting, and it's hard to talk about shorting just because it tends to be negative, and literally you're trying to turn a negative into a positive. And this year that's been rewarding. Okay. And so I find myself in the position of disliking it. But on the other hand, I'm crying all the way to the bank, because that's what's put me in the positive over $250,000. Okay. I lost money being bullish on stocks until April. Okay. And then I started shorting, and holy cow, you know, I made up for those losses. Plus I made $250,000. So I can't resist it at this point. But you know, if the market bottoms out, I usually wait for it to bottom and then start to take a swing upwards. I'll miss the first 5%, but I don't want to be caught prognosticating that it's a bull market when it's just a fake out. And these bull traps are everywhere, and they've caught me a few times, but SQQQ has bailed me out every time. So I'm very happy about that. Thanks for listening and watching. Be sure to like and subscribe. Click the notification bell so that you receive future videos. I wish you all the best of luck. We're going to need it. I'm more comfortable with using inverse funds than I used to be, just because I've gotten used to it and because it's been so rewarding. Thank you for listening.